Hi there, thank you for viewing this week's video. Let's look at the indices and check out how they have performed. Also, the outlook for the upcoming week. First, let's do a quick discussion on the market performance last week. The US market began with a rally as expected as it broke up from its resistance to form the next higher high. However, the week ended as interest rate fear limited its upside. In the Asian market, the STI and Hang Seng had moved higher as anticipated, but the STI and Hang Seng fell short of expectations. Let's take a look at the chart. Now let's switch the screen to the Dow chart over here. So you can see clearly on the screen right now. Well, if you look at the Dow, it began off the week with an early sell-off, but it has managed to end the first day with a strong recovery as it ended up with a nice white candle over here. The second day breakout offers a strong, what we call sense of bullishness as we now know that the next higher high is about to form. But unfortunately, Wednesday and Thursday's inflationary fear and of course the interest fear pushed the market lower, forming a minor resistance at this point, 35391. The week ended flat. Despite so, the hammer candle pattern suggests or offers a glimmer of hope. Overall, if you look at the chart, despite the flat movement, it is still a higher high, higher low movement, which means that the uptrend remains largely intact, and the hammer, right, may suggest a potential rebound next week, but it needs a white candle confirmation. At least the first day of trading, the Dow should close above this level around 35,090 points, and then a retest of this minor resistance at 35391 and break up from it helps it to resume its uptrend. But for some reason, if the index were to retest this support at 34316, it will be a potentially bearish sign, and this April may be something different from what we know previously. Let's take a look at S&P right now. S&P 500 started the week strongly with a strong closing on the first day. The second day breakout from its major resistance over here at 4598 has suggests that we have a very strong bullish market going into April. And of course, following its steep uptrend line higher is a plus sign. Unfortunately, the uptrend line was compromised as a heavy sell-off on Wednesday and Thursday ensured that the index closed below the line. The glimmer of hope is that the index was managed to close above its support level and its previous week high, and then the week ended with a hammer pattern. A new minor resistance is formed at 4637, and then for the market, or rather the S&P 500, to continue its uptrend, we are looking at a rebound next week, a white candle confirmation for the hammer for the S&P 500 to close around 4568 on the first night of trading next week, and then moving back to 4637. So it will be interesting if S&P 500 can break up from 4637 resistance, and will be even more interesting if the S&P 500 can trade back above its uptrend line over here. But honestly speaking, it can be quite hard because the uptrend line over here is quite steep. The ability to retest 4735, where the uptrend line now confluence with the resistance, is already a plus point. So we shall see what would happen next week. Now, moving on to Nasdaq. Okay, Nasdaq started the week strongly. As you can see here, a very nice white candle on the first day, strong white candle. And then the second day followed up with a gap up and then a breakout above its major resistance over here at 14508. But of course, the return of the selling pressure on Wednesday and Thursday ensure that the index retest its support over here at 14176 and creating a whipsaw over here and a minor resistance at 14646. And this is what we are looking at. Despite it testing the support level, we see the uptrend continues as the higher high, higher low is largely there. And then we are looking at the Friday hammer closing, which offers a very strong chance for the market to rebound higher. However, right, the CPI data again coming up on Tuesday may be a hindrance. Nasdaq will again at the mercy of the market depending on how the CPI data is digested. And of course, if you are looking at the market closely, last week there are talks about yield curve inversing again. And then, of course, the market so far is not taking the inversion strongly. So if Nasdaq is down, it's likely to drag S&P 500 along. But as mentioned, traditionally the April month had been a very strong month in the past 25 years of trading in the US market, and I hope that this is not broken in this year. So hopefully we can see a bullish market in April with the signs of holding at support level and retesting and breakout from resistance level will be the key. Now let's move on to the Asian market, starting off with STI. Well, after the fantastic start to the week, right, the index started to lose its momentum over here. Okay, so how do I know that it loses its momentum? We look at the black candle, is formed by a higher opening and a lower closing, and the upper and lower shadow suggests that there is some fight going on between the bulls and the bears. And then on the next following day, the uncertainty continues as the index yet again opened higher and closed lower. So on Thursday, the index responded with the first major sell-off since bottoming on the 9th of March, forming a new minor resistance at 3457. And of course, this will form a resistance zone from 3457 to 3467 resistance. But however, the week ended with a glimmer of hope as the index closed with a nice white candle above its support level. And then the uptrend is largely intact for the index, and a rebound to its resistance zone 3457 to 3467 will help it to continue its uptrend. And let's see whether can we do it next week. Let's move to Hang Seng. Last week, I anticipated a rebound from its 20-day MA for the index over here and a retest of its resistance over here. And I even hope for a breakout so that it can have a very strong sign of uptrend. But the index was just around 30 points below its resistance. And of course, that resulted in no breakout. Nevertheless, the index has managed to close the week at the positive note. And of course, next week, the ability to move back is to its resistance over here, right, can help to push for a breakout. Now, with the China government willing to adjust the rules to give full audit access to US regulators, the market may be cheering and happily push the index higher to break up from its resistance. And let's see whether it can take place next week. Now, wrapping up. The candle pattern from the US indices indicates a potential rebound, but the red-hot CPI data may be a hindrance. With no Fed meeting this month, the US market certainly can take this opportunity to move higher. On top of that, not to forget a whole new series of result announcement of corporate results, with the big banks kicking off their quarter results announcement on the second week of April. So strong results certainly can help the market to rally higher. Although the Singapore exchange has totally confused how the investors should invest in the Singapore market with the half-yearly result announcement arrangement, there are still some bright spots around. With the continuous action to reopen the economy, the STI's chance to rebound remains intact. Hang Seng's fortunes depends on its tech, as the index is made up mostly by the China tech companies. The opening up of a China government definitely can help Hang Seng to move into its uptrend. The sign of moving back up is to hold above its support level, which we have seen on a Friday, and then follow up by a breakout from its resistance. And then we will be looking at the long-awaited uptrend. Right now, thank you for viewing this video. I will see you again next week. Have a good week ahead and a good day.